दोस्तों ग्रो ओरिजिनल्स में मैं आपका स्वागत करता हूं जगदीप सिंह। और जैसे कि आपको पता है कि ग्रो ओरिजिनल के अंदर हम टाइम टू टाइम अलग अलग गेस्ट को लेके आते हैं और बहुत ही इंपॉर्टेंट टॉपिक्स के ऊपर डिस्कशन करते हैं। वैसे ही आज हम बहुत ही इंपॉर्टेंट टॉपिक के ऊपर डिस्कशन करने वाले हैं जिसका नाम है हाउ टू सेलेक्ट अ ग्रोथ स्टॉक। एक ग्रोथ स्टॉक को सेलेक्ट कैसे करें, और उस टॉपिक पे बात करने के लिए हमारे साथ हैं शशांक उदुपा जो कि सीएफओ है एवलॉन मीटा कंपनी से। तो जल्दी से मूव करते हैं शशांक के पास जो आपको इस टॉपिक के बारे में बहुत ज्यादा डिटेल में बताएंगे।
Hey guys, hi. My name is Shashank Udupa and today I'm going to do an episode on how to find the right stocks for you in association with Groww Originals. So the importance of today's video is for all millennials or for all the guys who actually want to grow their money in the next 5 years. I'm going to talk about how to identify and pick the best stocks in the growth segment, not in the dividend or the value segment, but growth stocks, so that in the next 5 years we make a lot of money, especially with the market which is going on right now. I think it's very crucial to find good stocks with good fundamentals, and today we're going to do a beautiful fundamental analysis on these stocks. So let's get right into it. The first and foremost thing that you need to do to find out these growth stocks is to first identify which sector is going to grow in India for the next 5 years. Now, there are a lot of ways to figure out which sector is going to grow in the next 5 years. Either look at global trends, because if there's a strong global trend, like for example in this year we had the pharma sector going up, then it was actually a good bet to get into pharma stocks for the next 5 years. Similarly, due to the pandemic, we saw that a lot of sectors went down, but then we're also going to see a revival for the next 5 years. So if it was me, I would go into the stocks that are going to go actually for a revival, like for example your automobile sector. Even your lending sector is going to improve a lot because a lot of millennials are coming and doing these EMI schemes and stuff like that. So the first and foremost thing is to identify which sector is growing in India and which sector is going to grow for the next 3 to 5 years. Now, you would ask, like, Shashank, how do we find out these growth stocks, right? For that, you have to be connected with the market. You cannot expect to just sit at home and chill and then just one day, open your laptop and start working on stocks, right? You have to know the pulse of the market. So how do you stay connected to the market? Now, this is very important for you to understand how the market works, and the only way to do this, there's no shortcuts to this, is that you have to do industry research. You have to read a lot of articles, you have to spend time on different websites, you have to go and read each and every article, each and every industry report, understand what is the growth outlook for India in the next 5 years, and only then you will figure out like top 3 sectors that you know for a fact is going to grow. Right? And once you find those top 3 sectors that are going to grow, you find damn good stocks inside those sectors that are going to grow, and only then you can do some good fundamental analysis on these stocks, and then you find the right stocks to grow. So this is what we are going to do today. First, we're going to put some parameters to figure out what stocks are good, then figure out what sectors these stocks are in, and then if both of them match, if the stock is fundamentally good and the sector is amazing, we will merge them because that is going to be a growing stock. We don't want it to be just stagnant for the next 3 years. So that is going to help us find an amazing stock. So the next thing, we're going to talk about the different metrics. So the first parameter that we're going to look at, which is obviously very, very, very crucial for all the stocks in the market right now, or all the stock companies in the market right now, are their sales or revenue, as people call it. Now, if a company is not making good amount of revenue over time, that means that company is not going to be good, right? Okay, 1 or 2 minor hiccups in the revenue is completely fine. For example, we had COVID, so all the March revenues were really bad. But if the company is doing well, quarter on quarter, year on year, every year for the last 3 to 4 years, from a top line perspective. Now, top line is basically your sales. The company generates sales by selling its products or services. If the company's sales is growing really well, that means the company is doing well. Now, if you put this, to find out, what is the parameter we need exactly to find this out, I would look at, let's find a stock whose sales growth has been very good and has been growing from the last 3 years, either a quarter to quarter growth or the last 3 years sales data is growing constantly by at least 10 to 15% a year on year basis as well. Minimum at least 10 to 15 basis. If you feel, okay, I don't want 10 to 15, I want a stock that is growing even faster, your obviously pool of stocks will reduce, but you can put a higher parameter. But this is all about understanding the right balance for you. Okay. So the first thing you do is find the last 3 years, or even if you want to be really safe, right, you can find the last 5 years sales data and find the growth of these stocks. 10 to 15 to 20% amazing growth, a CAGR growth will be super important for you guys. So that is the first thing you need to figure out, sales growth analysis. Okay, so now we looked at sales growth in the previous one. We want sales growth to be around 15%, which is great. If that is there, I'm very happy if the sales is growing 15%. Another thing that I'm going to look at is the profit after tax, which is called PAT, profit after tax. Now, profit after tax is basically the final profit that a company gets after cutting everything, basically their expenses, their taxes, depreciation, and any kind of loan interest on the loan that they're paying. So, wo sab kaat ke at the end, we have something known as profit after tax. Now, profit after tax is a very key metric for all companies, and if you look at any news article, you will always see that the net profit for this quarter has grown 50%, 60% and stuff like that. They try to hype it up in the articles that way, but we will look at PAT growth, a consistent PAT growth. I don't want a PAT growth which was good last year but became horrible this year, right? I want this company to be consistently growing in the last 3-4 years, and that is something that we're going to look at. So the next parameter which is super important is profit after tax growth, which again I want about 15%. I don't want it below 15%. The reason why my parameters are slightly higher is because I want to find that these stocks are really good and they're growing stocks. I don't want them to be sad stocks, right? And we have to remove 1 or 2 anomalies which might have just gotten good right now, or we have to do some more research into them. But these 2 things are very important. Sales growth above 15%, PAT growth above 15%. Okay, then we'll look at the next thing that I find super important after this. The third thing that I find very important, now we understood, chalo, a company is making a lot of sales, so the top line is really good. Company is saving a lot of expenses, so the profit after tax is also very good. But beech mein ek aur metric aata hai which a lot of people ignore, but I like to look at it a lot. And that is something called as OPM, or operating profit margin. So before we understand what operating profit margin is, we need to know first what operating profit is. Now operating profit is very simple. Now you have sales at the top, you're selling something, you have sales on the top. Now whatever expenses are that related directly to those sales, for example your employee cost that you have to pay people, or say your manufacturing cost that you have to pay. So all these things get cut from those sales, these expenses, and then you're left with an operating revenue. If you're obviously profitable, it's operating revenue. Now that is called your operating profit. Now operating profit is first sales, small expenses, your direct expenses, then operating profit. Uske baad aata hai your interest, your depreciation and stuff like that. So this is all before that. All the expenses directly related to your sales is known as operating profit. Now the margin of that, basically your operating profit margin to your sales, is called operating profit margin. Now operating profit margin is super important, because if I'm making 100 rupees in sales, okay, and if I'm spending around 80 rupees, okay, that means I have 20 rupees left. Okay, now that means the margin that gets calculated over there is my operating profit margin is approximately around 20%, right? Now the more this increases, obviously my expense is lower or my sales is higher. Either one of that can happen. So if my sales go up more but my expenses don't go up at the same rate, my margin improves. Or if my sales doesn't go up so much, but I find this amazing technology, or I use automation, or I get a bigger machinery or plant and machinery and actually reduce my expenses in the company, or I do some kind of cost cutting, and I see that my margin has now slightly improved from 15 to 20% or maybe 25%. That is something which I consider really good in the industry, right? Now again, my parameters are slightly higher. I keep a slightly higher parameter for this. So I keep an operating profit margin of greater than 20%. Now you can even start off with 12 to 15%, but the important thing is once you find a stock, you need to see whether it's been growing in the last 5 years or is it declining in the last 5 years. If the operating profit margin is growing, that means boss, your company is doing a lot of innovation and they're doing something or the other to reduce their expenses, or they're increasing their sales really well, right? One of this is happening and the proportion is helping their margin at that point. So for us, it is very important to understand whether the operating profit margin is increasing or declining. Increasing, great for us. Declining, thoda we have to figure it out. So the third parameter is OPM, which is operating profit margin, greater than 20%. Coming to the fourth parameter, I hope you're following what I'm saying right now, right? 3 things we looked at from the profit and loss account. Sales, very important. Operating profit margin, ki kitna bacha rahe wo sales karke. And then last mein sab, after cutting everything, we figure out what is the profit after tax. Now these 3 things we found out from the profit and loss account, P&L account. The next what we look at is from the balance sheet. The next 2 things that I look at from the balance sheet to see how healthy is this company. Now what do you mean by how healthy is this company? Healthy means the balance sheet gives you the health of a company. Health means if this company, so imagine this company is doing a lot of sales, but it has been taking so much loan from the market, loan liya, wapas, again it took a loan. Now when you take a loan, you have to pay interest on this loan, which is again not very good for a company to have lot of loan and lot of interest when the sales are not doing really well. But what we like is, if your sales are doing well, you can have your loan. I'm not saying don't have loan, but don't have too much loan. So there is a very important term in the industry called debt to equity ratio. Now debt to equity ratio is super important to understand, because they find out the balance health of the company from the balance sheet. They figure out, basically it's an indication, it's a ratio to see how much debt is there in the company when they compare it to the equity pool of the company, the shareholders' equity of that company. Basically what they're saying is, if the equity is very big, if I have say 100 in equity and my debt is only 5, then it is okay, it is like half. Okay, my debt is, or my loan is half of my equity. But if my whole equity is 100 and my debt is 200, then boss, it is slightly scary, because you're saying your entire company, whatever the equity or whatever surplus, whatever reserves, whatever money you have, you have loan which is twice the amount of that. So I don't want companies like that. I want companies that have half, right? And I'm saying that debt is not a bad thing. Taking loan is not a bad thing. Overtaking loan, keep taking loan again and again is a bad thing, or you're overburdening the loan. But if you have a smaller loan, okay, which is good for your working capital or something like that, loan is very important. So debt to equity ratio, I say, should be less than 0.5. Okay, make it less than 0.5. I don't want it to be more than, I don't even want it to be 1. For me, a growing company is a company that actually does self-sustained growth. Self-sustained growth matlab, I don't want to take too much money from outside the market like loan. I am taking my sales, saving a lot of money from that sales, putting it back into my company and growing that. So when that happens, the company is very well financially managed, and that is very important for a growth stock. The next ratio again is from the balance sheet, which we find out from the balance sheet, which is super important again for me. It's called return on equity, and you might have heard about this. Return on equity, or if you look at money control and stuff like that, they will call it ROE. Okay, so return on equity basically क्या होता है? Return on equity is like how much the money the company makes at the end of the year, the annual return of a company that it makes. They divide it by the shareholders' equity, which is basically the equity pool of all the shareholders in the market, and they divide that and they come with a percentage around 10%, 15%, 20%. This basically says that how much is the company generating returns, right? How good the company is in generating returns on the investment received from its shareholders. Basically, ROE is a very good metric for people like me and you to find out when we invest in the market, is to figure out whether the money that we're investing, are we getting a good return back or not. And if the return is not good, if it's in a loss, my ROE is not even there. I don't have a return on my own equity that I'm giving. So return on equity again is a good sign to find out the growth and the health of a company. Now, it is good to find if the return on equity is constantly rising. Okay, that means the shareholders' equity pool is not increasing much. That means new shares are not coming in the market. But your top part, which is your total amount of sales, is constantly increasing. Your net profit is increasing constantly. That is very good for me, because if I have invested and I'm constantly getting good return on my own equity, great stuff, great job. So that is another important parameter. So I'm again rephrasing it. Return on equity should be greater than 15%. Now, don't worry, I'm not going to bore you too much. The last parameter that is there for me to find out amazing stocks is something called as market cap. Okay. Now, market cap or market capitalization is basically the total value of a company. And how do they find this? They take the price of the company, jo traded price hai, they take the price of the company and multiply it with the total number of outstanding shares in the market, or the liquid shares in the market that are currently circulating. Now, basically what this says is, this almost determines the total value of the company. Market cap is like a value of the company. So you see these news articles where they say TCS is now valued at 1 trillion. That is from that market cap is what they say. Now, market cap is super important obviously to understand, because if the share price is very high, okay, and the number of shares when they multiply, the market cap determines how big the company is. Now, a company with say a market cap of less than 100 is not going to be very good for you to understand. The reason being, it might be a struggling company and it's still coming up. So you want to be a little safe. So, but you also want to find stocks that are growing. You don't want to find stocks that have already grown like TCS and Wipro. I mean, those stocks are like good value stocks, dividend stocks, but I want to find growth stocks. I want those multi-baggers to figure out what these multi-baggers are. So I put this parameter for market cap, that the market cap should be greater than at least 500 crores. Okay, minimum 500 crores agar market cap hai, above 500 crores, then I'm very happy about the stock. So this is my last parameter, market cap greater than 500 crores. Now, let me summarize all the things so that you make it very easy for you to understand what the, this algo is, right? So first, sales growth of 5 years greater than 15%, and then profit growth of 5 years also should be greater than 15%. Operating profit margin or OPM should be greater than 20%. Debt to equity ratio should be less than 0.5. Return on equity should be greater than 15%. And finally, market cap should be greater than 500 crores. Now, this is something that I look at. Okay. And now, after doing this, obviously you will get a lot of companies to figure out. A lot of companies would come in your parameter. Then we have to start breaking them down to figure out which sector mein kaun sa company looks good for me or you, and then which company is not overvalued or undervalued, to figure out whether something is good or not, which we will do in the next segment, how to analyze the stocks that we have just found out. So we saw that in the last part of the episode I spoke about those 5 parameters. Now those parameters is what we're going to use to find some right growth stocks to actually go deep into this entire concept and figure out how to get these stocks and how to do fundamental analysis. So after analyzing these screeners, we found a few stocks that I've mentioned here in an Excel sheet, right? Now it is very important for us to understand that these stocks have passed all our parameters, and we are going to select 2 stocks to do a fundamental analysis. Now the first stock that we're going to choose is from the pharma sector, which is called Alkem Labs, and the second stock that we're going to use is from the IT sector, which is called L&T Infotech. So let's get into it. Now, what I did was I went to Groww. I've logged in, and you can see that there's a section for stocks, mutual fund, FDs, gold, and even US stocks. It's coming soon, but I'm not going to deep dive into it because my focus is to focus on the stocks and find good growth value stocks. So the first stock that I found from my screen or screener is basically one stock called Alkem Labs. Now, I'm looking at it from a long-term perspective. 5 years minimum. I want 5 years growth, Baba. So if I've looked at a 5-year growth strategy for a growth stock, that means the growth has to happen in the last 5 years. Now, if you look at this, 5 years ago, this stock on Jan 26, 2016 was trading around 1,355. And currently, after 5 years, you can see how it's grown. It's grown to around 3,100, and today it's around 3,058. That means, yeah, definitely almost doubled, right? 1,300, oh, definitely doubled. So if you're telling me that you got 100% return in the last 5 years, is that good or bad? I would say it is good, not bad at all. Okay. But again, we need to go more in depth to figure out whether this is really good or bad to invest right now. Now, if you look at the next one, we have the company stats. The market cap of this company is around 36,000 crores. That means it's a very big company, so slightly safe. Comes in the mid cap category. The next thing I look at is the PE ratio, which is the price to earnings ratio, right? The PE ratio of this stock is 23.6, and the industry is currently trading at 29 times the price to earnings. That means this stock has the potential to go slightly higher because all the industry guys are trading at a higher level. Now, ROE, we spoke about ROE, return on equity, that is at 21.51%. And again, that is super important because we want a company that is very good with ROE. Now, what does this company do? This company is in the pharmaceutical space. It works in the pharma and drug space, established in 1973. And you have some information about Alkem Labs, the MD, who's the MD of Alkem Labs, and when was it founded. Now comes the important part, the financials. Okay, this is super important. Now we can either look at quarterly or we can look at yearly. Let's look at yearly first. Okay, just automatically look at this chart. The revenue is basically the sales. The first one we spoke about, 15%. Constantly going up from 4,500 crores to 5,200, blah, 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 came up to 6,600 crores. Now, this is something that I like to see. Key company constantly is growing and I like it. Now, let's look at profit, whether it's constant. Okay, the profit is not very constant like how it should have been, but on an average, because this came into my screen, that means in the last 5 years it has given more than 15%. I'm happy. It is better than most of the companies that are there. Now I want to see more details. Show me more details is what I keep asking, right? Now let me go to the yearly stats. I'm clicking on yearly here. And the revenue targets, the revenue has grown constantly. You can see how much is the net sales, it has grown. If you want to go deep into it, you can look at the expense, okay? And once that happens, remember I spoke to you that you need to see what is the profit after tax. So we come to net profit and see what is the profit after tax, and we see what is happening here. So that means the revenue is good. The EBITDA, which is earnings before interest, tax, depreciation and amortization, is also good. Earnings per share is also growing from 73 to 105 in the last 4 years. Now, I want to also see the operating profit margin, right? That is not here on yearly, but if you go to quarterly, you can see it. Now in the quarterly, which is every 3 months, company has to come and give its results. Now look at the operating profit margin. 26% in 19 quarter, 24, 22. If it is fluctuating around that, around 20, I'm still happy because 20 is a very good percentage. But in the last 2 quarters, it has gone up from 22 to 34 to 30. And if it's around 30 now, obviously that means if I'm making 100 rupees, I'm only spending 70, matlab 30 rupees bachta hai, then I'm very, very, very happy. Right? So again, this is very important to see operating profit margin. Once we see all this, we go back, okay, 5-year chart so that you see that it's growing. We go back and then we see the promoter shareholding pattern. Just to understand for ourselves, is it a good company or bad company? You go to shareholding pattern, you see that the promoters are holding a lot of stake, which is again very good for a company. Mutual fund holding is also there. That means a lot of mutual funds have put their faith and trust into the stock and they have bought it, right? And you can go down and see if there are more companies like insurance companies. The foreign institutional investors have also invested in this. That means acha stock hai. It is a good stock for a growth perspective. And then it also shows you the similar stocks here right itself. You can see that it has price market cap. So you see the biggest is Sun Pharma and you see all the other stocks over here with respect to its market cap directly in a beautiful order. So it's great for you to understand, right? Now the second stock that we will analyze after Alchem Labs is called L&T Infotech. Now this is in the IT space, so we will look at L&T Infotech right now. Now immediately if you look at the last 1 year chart, you will see that there is a very significant growth pattern that is seen. Now if we go to the 5-year chart, you will also see that in the last 5 years, this stock, which was trading around 691 in July 25th, 2016, is now trading at around 4,000 rupees, which is again a massive jump, almost a 4-5x jump in the last 5 years. And if you see, it's clearly mentioned here that there is a 467% jump in the last 5 years. Now this is how a growth stock looks, right? This is why growth stocks are so important, because if you catch them at the right time, they will grow really fast. Now let's look at some other parameters. Let's look at the company statistics. Now if you look at the market cap is currently around 69,887 crores. That means the market cap, this is somewhere in the mid to the large cap segment. So I think it is almost at the large cap segment. So it's a quite, let's say, a stable stock. It is a very good stock, right? Now if you look at the PE ratio that we also look at, it is around 40 rupees and the industry PE is around 34 rupees. That means this stock is now currently slightly overvalued. But is it really overvalued? We don't know, because it might be a premium that this stock is trading at because it is such a good stock. Right, the next thing that we would look at is the earnings per share, which is also called EPS, and that is around 99 rupees, which is very good as well. And the last, which we love a lot, which is the return on equity, ROE, is now at 28.55%. It is very high. The reason being it is an IT stock, so that is why it's very high. Now let's look at some things about the company, right? So Groww gives you this analysis of, Larsen & Toubro Infotech is an IT software company incorporated in 1996. The founded year was 96 and the managing director currently is Sanjay Jalona. So this is just some information to know. If you want to go research about the managing director, you can, so that you understand who's running this stock. Now let's go to the company financials. Now in the company financials, let's look at the yearly charts, because we're looking at a 5-year timeline. So at least 4 to 5 years minimum we have to look at. So if you look at the yearly chart, you can see that the revenue, there is a clear uptrend in the revenue. You can see that blue line, there is a clear uptrend in the revenue. Even if you look at the profit, again you will see that there is a clear uptrend. So all the growth stocks, as we noticed, will have a clear uptrend on a yearly chart. That means year on year, this company, this stock is growing really well, and that is something that we love to watch, right? Now if you go next, if you go down, you will see something known as a shareholding pattern. Now in the shareholding pattern, you will see that the promoter holding for this stock is around 74.3%. Now that means it is a very good stock. The reason being, if the promoter holding is high in a particular stock, that means the promoter has more interest in the stock and he wants to grow it, because if the company starts growing, they make more money. The promoter makes more money. So if the promoter has a lot of stake, that is very good. It's considered a very good sign. Next we would look at is the foreign institutional investors have around 13%, which is again very good. So that's a total of around 85%, 87% only by these two people. Then we have the public shareholding, which is people like me and you. That is around 7.81%. And then mutual funds around 3.66%. So overall, if you look at this, this is another example of a very good growth stock. You see that the ROE was good. The sales have been growing constantly. The profit has been growing year on year constantly. And obviously, if you look at the chart as well, you will see that the chart also has been growing constantly around 500%. Now, if you go down, you can also check similar stocks in the same segment with the P ratio and stuff like that. So if you look at this, you can see that TCS is the biggest stock with the market cap of around 11 lakh crore, which is very, very high. So that is extremely high. And look at Larsen & Toubro, which is around in the 6th or 7th position. it is only at 69,000 crore. That means you know for a fact that this has a lot of scope to actually grow and come to that region. So if L&T Infotech really does well, it keeps growing really fast, you can see that it will start growing more in market cap. The P might remain the same, but it will grow in market cap, and the price of the stock also will grow, and the return on your equity will also be amazing. So this is how we analyze growth stocks. We saw 2 growth stocks. So this was Larsen & Toubro. Okay, I hope I didn't bore you. I hope you understood what I was trying to explain. It is very important to find a good growth stock. Now, you might do a particular screen, you might get 100 stocks, but it is super important for you to go through each stock, go inside each stock, understand their fundamentals. Okay, and fundamentals does not just stop at the shareholding pattern or the revenue. You have to go look at the news articles, read research reports on different platforms, right? Try to understand how the promoter is. Go watch some videos of the promoter. See how his outlook is for the next 5 years. There is something that is called earnings con call report or a transcript report. Go read that. Okay, it takes time. It will take you 30-45 minutes to read that entire document. But if you don't read all this, you will not understand whether this stock is going to be amazing or not in the next 3 years. And you need to understand and align with the vision of the founder of that company. If the founder is saying, we will do a small growth or something like that, boring guy, he won't do very well in the next 5 years. But if someone's like, we are going to open plants, we're going to make a new manufacturing plant, we're going to increase production, we're going to go to the US market, these are the things I want to hear, because in the next 5 years I want this guy who's working so hard to double or triple my money even, right? So don't just stop at looking at screens, or don't stop at looking at fundamentals. Understand the company in and out. I call this understand the Janam Kundli of a company, right? How they find Janam Kundli of you. I want you to find the Janam Kundli of the company and find out exactly company karza kya hai, what do they do, how do they do it before, and what are they going to do in the future. And if you find the perfect balance in, okay, this is something that I feel is good, and the stock is amazing, and the sector is growing, that's when you have the perfect growth stock. And that is when your stock will go up, you'll get a multi-bagger, and you will make a lot of returns in the future. So I hope it helped, and if you liked it, please like the video, subscribe to the channel, and I'll see you later. Bye. Hey guys, so big disclaimer. This video is only for educational purposes. This is not a video for stock recommendation or stock advice. So all the stocks shown in this video is only to teach and understand how the stock market works. It is not a recommendation by me or by Groww Originals. Okay, just putting it out there.
दोस्तों, मैं उम्मीद करता हूं कि आपको आज की वीडियो बहुत पसंद आई होगी. अगर आपको आज की वीडियो अच्छी लगी तो वीडियो को लाइक करें, कमेंट करके बताएं कि आपको इसके अलावा और क्या फैक्टर्स लगते हैं जो आपको एक अच्छा ग्रोथ स्टॉक पिक करने में हेल्प कर सकते हैं. इसके अलावा अगर आपने अभी तक ग्रो के चैनल को सब्सक्राइब नहीं किया तो जल्दी से ग्रो के चैनल को सब्सक्राइब करें ताकि आप हमारी किसी भी इंपॉर्टेंट वीडियो को मिस ना करें. हैप्पी इन्वेस्टिंग.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.